Joining us now is 314 Research co-founder Warren Pies. And Warren, I really appreciate you coming on today to talk about your latest strategy piece, which I thought did a great job of sort of wrestling with some of these conflicting data points, some of which have a very long history of being reliable, such as the technical action in the market coming into this week. The tape looks much stronger. On the other hand, Fed, macro, and some of the other stuff gives you some pause. So where do you come down on how this shakes out?
Yeah, thank you for having me. When you step back and look at the market right now, I kind of feel like depending on what your philosophy is and how you attack the market, you could see have a totally different view. And so we come from a background where we have macro and technical. And one of our old colleagues, Ned Davis, he was famous for saying his rules of research. And two of the big rules of research was, number one, don't fight the tape. Number two, don't fight the Fed. And as I see it right now, I think these two big philosophies or truisms are really running up against each other. And so let's start with the technicals for a minute. We've had the S&P 500 break above its 200-day. We've seen the 50-day break above the 200-day. We've seen on the NASDAQ, it's broken above the 40-week moving average on record volume we haven't seen for over a decade. And then at the same time, we've had a breadth thrust, which technicians love breadth thrust. They have great track records. And this happens when you basically have a large universe and you have broad participation. So let's say 90% of all issues in the S&P 1500, for instance, have broken above their 10-day moving average. So all these things have great track records. That's the tape. But on the other hand, the Fed is obviously doing the most aggressive tightening cycle that we've seen in modern history. And then at the same time, running down their balance sheet, which I think is especially important at this point in the cycle. And so as we see it, when we start controlling for these two variables, what we find is that these technical indicators, they have long track records and they're good. And I know that price can see through a lot of things, but when you see them fire at this point of the Fed cycle, while the Fed is hiking aggressively or pauses following hikes, the track record is much less clear. And so for us, we're siding more at the Fed. I think that's the dominant factor in the market, not to mention the fact that the market is now about 10% overvalued on forward earnings plus interest rate basis. So you're not just fighting the Fed, you're fighting valuations. And I think an earnings outlook that's really baking in a soft landing.